All right, welcome back to this week's breakout watch list from November 14th to the 18th. In this video, we'll be covering the top 10 swing trading setups going into next week. Each of these stocks either have strong fundamentals, strong technicals, or volume patterns that lead to uptrends. Thank you MarketSmith for sponsoring this video. MarketSmith is a trading research platform that we're going to be using to break down each of the stocks. Here are the 10 stocks that we'll be breaking down in today's video, along with potential entry points and stop loss placements. Please do me one favor that will help me out. If you see a quality setup in the market that is not on this list, make sure you drop it in the comments along with your reasoning. I'm hopefully helping you out with these 10 stocks today. I could use your help as well. Now we're in MarketSmith breaking down the first stock of the day. It's AMPX. This is an energy alternative other, which is the 33rd strongest group out of 197 in the market, earning an A- group strength rating. Now more specifically, this manufactures lithium batteries, and last week lithium stocks had a really nice week with LTHM nearly going into all-time highs, breaking over the 50-day moving average. LAC, another popular name in the space, breaking over the 50 and the 200-day moving average. And SGML, IPO, that has been really the leader of that lithium group, just kind of resting, finding support at the 21 EMA. So it's definitely a group that we want to be focusing on, and finding more setups within the group gives us a little bit more confidence. Now this was a stock that I was more recently looking at this 1250 pivot as the market was coming up and rallying, but you could see as the market failed, this failed that 1250 pivot, pulled back through the 821 EMAs, and is now consolidating kind of between $9.60 and $11. This is a stock that I started a position on Friday as it broke over Thursday's high and the 8-day EMA right around 1060, but it was a 5% position size, not very large at all. If we zoom into the 30-minute chart, we could see we did find support at 950 on the most recent pullback, which is constructive. Rallied up to 11, so I'm looking to add through 1110, the high from Friday, or if this does kind of blast off, gaps up on Monday, how this acts around 1250 is going to be very interesting in an area that I'll be watching for AMPX. Next stock that we have is ANET. This is in computer networking, 13th strongest group in the market. There's always a theme with these videos. I want to be focusing on the strongest stocks in the strongest groups to have the highest probability of finding a winner. So 97 earnings per share rating. You can see very strong earnings per share growth, sales growth, after-tax profit margins improvement. So fundamentally, this is a strong stock as well. A+ group strength rating, B- accumulation distribution, meaning if it was an A+, you'd see all of the heavy volume days come on days where the price moves up and all the low volume days where the stock pulls back slightly. And that's the volume pattern that we're looking at. More recently, we have seen heavy volume days as the stock has moved up. We have 1, 2, 3, 4 heavier than average volume days on days that the stock moved up, which is really nice to see. Most recently, this had earnings on the 31st, earnings per share up 69%, sales up 57%. Don't really need to go into the details there, but moved up right through this 130 area. As you can see, this previous areas of resistance continues to act as resistance as we pulled back along with the market earlier last week. As we saw all the kind of crappier stocks really come off the bottom with a lot of power, some of the stronger stocks in the market, like ANET, didn't have that same type of rally on Thursday and Friday as other stocks did. Now this was still up 3% on Thursday, but then we got an inside candle really setting up this trade for Monday, looking for a break over 130, right around the high from Thursday for ANET. Next we have CAR, Avis Budget Group. This was on the breakout watch list last week, and it's on it again this week. I like when stocks continue to stay on this list because it shows that the pattern hasn't exploded either one direction or the other, but we're actually seeing price and volume tighten up. And that's exactly what we saw last week. Very low volume, well below average here. And price volatility compared to the indexes that were all over the place last week, not as much. So if you look at the ATR, average true range, you'd see that tightening up for CAR. With this, we're just looking for a break over Thursday's high, 229.11. Call it 230 there as a potential entry point, and then a stop loss under Friday's low, 224.03. Call it 224. The next stock that we'll cover is DAWN. It's the first biotech stock that we're covering today. That biotech group continues to act really well, 10th strongest out of 197. We'll take a quick look at XBI because for the what feels like the 100th time, but really 1, 2, 3, 4, 5, 5th time, it's testing this 200-day moving average, and it does look to be clearing that now. We are at an area where people have sold off right at 85 before, so let's see if we finally changed this trend of getting rejected at the 200-day. We see a pullback to the 200, get supported, and then put in a higher high and higher low. That would be awesome for the group and also for DAWN. Looked at this last week, Thursday and Friday, potentially entering around the 50-day moving average. I never took that trade myself, but really nice move Thursday and Friday. Not the strongest moves in the market. Those all came from the stocks that were beaten down the most. But what I would love to see is more price tightening just above the 50-day moving average. Then we could use Friday's high as a lower entry point, 2143 there. Otherwise, just looking at 2160, the previous highs here as a potential entry point, breaking through that area for DAWN. When the CPI numbers came out lower than expected on Thursday, all the growth stocks that have been beaten down the most really had that massive rally, and energy stocks were kind of forgotten about. I still think there's some more juice in the energy group. You see XLE did roll over on Wednesday through the 8-day EMA, but quickly reclaimed that on Thursday, moved up right near all-time highs on Friday. And after this little shakeout, I still think this is a group that has more room to run. So looking at the stronger stocks in that group, we have DO, which is an IPO, oil and gas drilling, fourth strongest group in the market, A+ group strength rating. Strong fundamentals most recently, had it last week, 200% earnings per share growth, 6% sales growth. And after a quick pullback, like you saw in XLE through the 8-day EMA, we got the same action with DO. Recaptured it on Friday, and now kind of building right around $10. That's a potential entry point. Similar to other charts, I would love to see more price tightening, and even another pullback to start the week would be ideal for this setup, where we can really attack that $10 area with power for DO. The next stock that we'll cover is EMBC, another IPO stock. This one from the medical supplies group, which is really weak at this point, 180 out of 197. Just wanted to point this out. I would love to see more price tightening before a break into new highs, but this popped up on my relative strength new high scan that I run every single day after the market closed. But this blue dot from MarketSmith says that compared to the S&P 500, this stock has never been stronger, which is awesome to see. We always want to see relative strength new highs because that's where the money is flowing, even during a tougher market. So right off the lows through the 50, the 8, the 21 EMAs, came up to the highs here. So this type of price action the last 2 days, while very strong, is very volatile and doesn't really allow for low risk entry points. I would love to see either just more days tightening up here, especially if the market pulls in at all. This has every reason to pull into 33 area, but build just some price tightening so we can get a less mechanical and more like chart driven stop loss here. Otherwise, if you just buy with a break into new highs here, you're going to have to just randomly pick like a 5% stop, 3% stop, whatever fits your risk tolerance. And I don't love to do that, especially after the market has just ripped higher for 2 days. So I'm going to be a little bit more patient with this. If it goes without me, it goes without me. But looking for maybe 3 or 4 days tightening up, even a week or two would be fine here before it breaks into new highs with a more kind of standard stop loss for EMBC. We can't ignore the solar group, so we put on First Solar, FSLR, Energy Solar, third strongest group in the market out of 197, so A+ group strength rating, A+ accumulation distribution, 99 relative strength rating, really checks all the boxes, except for earnings. Earnings are still negative, which is not ideal, but price is what pays, and we're seeing price appreciate and go into all-time highs while the market's just coming off its lows recently. So with First Solar, what I really want to look at here, this daily chart seems pretty volatile. We're pulling into the 8-day EMA, but the 21 EMA is still, let's see here, 5.8%, or price is still 5.8% above the 21 EMA. So if we see a weaker market and this pulls back into like the previous high at 145 and allows that 21 EMA to catch up, that would be the area that I would get most aggressive with position sizing. But if we drill down to like a 30-minute chart, I just wanted to point out that most recently on Friday, the solar group or alternative energy stocks didn't have the strongest day. But as this came in, it held 150, a nice round number, and an area that we would expect support, and we got that support. So there is some liquidity in this name supporting it at 150. If we see more market pressure in the first half of the week. If we can hold this 150 area, that would be great. Otherwise, a pullback into 145 and that 21 EMA catching up would be another area to watch for First Solar FSLR. Second oil and gas name, HLX, that I wanted to cover. This is an oil and gas field services, second strongest group out of 197. So we got that A+ group strength rating, A accumulation distribution. Lots of power in this name. You can see all the heavy volume days coming as this shoots through the pivot around 460 all the way up to $7. From there, we've spent about 2 weeks just trading sideways, allowing that 8-day EMA to catch up on below average volume. We did have 1 day on heavier average volume pulling back, but it was really only down 0.8% that day after making a new high. So not as concerned about that heavier volume pullback day. What I would want to see here is just a clean break through $7. This stock has a lot of power, and after the little shakeout that energy stocks had last Wednesday, this only pulled back to the 8-day EMA, not doing anything wrong, lots of power in the name. So want to look for 7 as a potential entry point. Now that will create more of a mechanical stop loss at around 5%, or the stop under Thursday's or Friday's low. The low there was 678, depending on your trading style there, but a stock and a group that we want to keep watching, because although growth had a great Thursday and Friday, that is just 2 days, and energy stocks didn't really go anywhere. They're still right near their highs, so we want to focus on that group. And to no one's surprise, we have another IPO stock acting well. This is NerdWallet, NRDS. I love that website. I think it's so useful, so I'm glad the stock's starting to act well as well. Most recently, right as earnings were coming in, we had the 8, the 21, the 50, and the 200-day all right around the same price. Price was below that going into earnings, so you wouldn't have held a position going into that, but earnings per share was up 108%, sales up 45%, after-tax profit margins slightly increased there, but a really nice move on earnings, up 37% on 900% the average daily volume. Massive change in supply and demand right there. Closed high in the range as well, 83rd percentile on a day where the market pulled back. So great strength there. And then the rest of the week, or this past week, just sideways action, allowing that 8-day EMA to catch up. I was watching this on Friday, potentially buying as it broke over Thursday's high because it was such a tight price action on Thursday. I never took that trade either. I think it might have gapped up and then kind of pulled back in. But what we're really looking here is we want to see support at the 8-day EMA or this 1250 area as it was supported previously. And then this topside pivot at $14 as a potential entry point on market strength. So market weakness, look for a position around 1250. Market strength, look for a position as we're breaking out with the wind at our sale at $14 for NerdWallet and NRDS. And the last stock that we'll cover is PCVX. This is a biotech stock, one that I did trade last week. Made a little bit of money, nothing crazy because it never got trending, but wanted to put it on the watch list this week. Lots of power in this high tight flag. Tons of volume pouring in as the stock moved from basically $20 up to $45 for over 100% gain. From there, we've pulled back to the 8-day EMA once, got supported, attempted to rally on Thursday. That's where I actually bought it. We can go to a 30-minute chart. I bought it as it was coming through $45. It got out. I sold a bit into strength, and then as it came back through my pivot at $45, I just cut the rest of the trade. I like to do that with these biotech stocks that have a lot of power. If they don't go immediately, I just want to get out and save my capital because we do have a lot of downside risk with biotechs, especially gapping down overnight. We don't want to be involved in that with any heavy position sizing. So the fact that it got going a little bit and I got a little bit of, I got to sell a little bit into strength was nice, but then as it came back in, I just took the position off. From there, did similar action on Friday, but you can see this is really tight price action. I would look for another move through just 45.33, kind of the high from the midpoint of Friday, with an idea that as we come up through to 46.45, this is where sellers stepped in last time. Maybe sell a portion of the position into strength there, similar to how it acted on Thursday, so you can guarantee some profit on the way up and then protect your downside risk. So this is PCVX, another biotech stock, high tight flag that I'll be watching for next week. And that's going to be the breakout watch list for the upcoming week. If you guys enjoyed the video, please do me a favor and leave a like and subscribe to my channel. make this breakout watchlist video every weekend along with other trading related videos. A big thanks to MarketSmith for sponsoring this video. MarketSmith was a trading research platform that we were using to break down each of the setups. So if you like the service and want to give it a try yourself, there's a link in the description below. And finally, if you want to hear more from me throughout the week, you can follow me on the other social media sites. I'm at Nick_Drendel on basically everything else, but on Twitter, I'm at Nick Drendel, no underscore. Have a great week, and I'll see you guys in the next video.